Joining us now to discuss is Tom Dunleavy. He's a senior crypto research analyst at data firm Messari. Tom, thanks for joining us this afternoon. So taking a look at some of the macro challenges ahead, where do you see the narrative for Bitcoin in the thick of it all?
Yeah, thanks for having me. I think you hit on it right from the top. We still have largely a very tight correlation between both Bitcoin, Ethereum, and crypto to the decisions of the Fed, to the broader equity landscape. If we're looking at how equities are likely to perform over the next 6 to 12 months, that's of course challenging to predict, but all the most reliable indicators we have looked at in the past are showing recession signs. So the yield curve is a very reliable indicator of when recessions are coming. And the most reliable portion of that curve, the 3-month, 10-year, has flipped negative. We look to see recessions in broader equity markets, something like 6 to 9 months after that. That would put us Q1 recession, and risk assets usually bottoms towards the beginning of those recessions. So we likely could be looking at a Q2, Q3 bottom, at least in stocks, potentially in crypto, in Bitcoin, if these correlations do hold. There, of course, is the potential for them to sort of deviate, something that folks have called for quite some time. We've seen a little bit of that in the back half of the year, but we'll really need incremental flows either from institutions or governments. I think a theme we've seen over the last few weeks, which has been encouraging, is more institutional players start to consider Bitcoin a store of value asset. You've seen not only Credit Suisse talk about this with Zoltan Polzar, but also you've seen institutions like Harvard actually come out and write research papers that the weaponization of the dollar in the Ukraine incident has actually led countries to consider other hard assets, obviously like gold, but also Bitcoin in the future. And there could be more adoption of Bitcoin as we go forward because of the actions not only of the Federal Reserve, but also of the US government in sort of weaponizing the US dollar and treasuries.
I always wonder when we talk about correlations between Bitcoin and the wider macro environment of the Fed and whatnot. The whole thesis behind Bitcoin was that it was supposed to be an alternative to the financial system. So what's going on here? You just can't escape it?
Yeah, it's tricky. If you look on sort of different rolling correlation periods, whether 30, 60, 90 days, you'll see it move around a bit in terms of the, does it move with equities or does it move against equities? But, traditionally, I think we're going to need more incremental flows to actually decouple that trend right now. Large allocators still think of Bitcoin as a risk asset and aren't really allocating as such. So we need something to move away from the current allocation scenario. I think another interesting sort of tidbit we had over the year, which is not really reported, is we had Fidelity add Bitcoin and I believe Ethereum to 401ks. So if you think about the stock market, you have your paycheck every 2 weeks going to buy target date funds. So there's always a bid of a certain amount of dollars coming into equities. When you start having folks add 1, 2, 3, 4, 5% positions in their 401ks, you have these price indiscriminate buyers that automatically come in and support the asset. So that could be another tailwind going forward as well that can help decouple things. But largely we need more adoption and we need more flows.
All right. We have been seeing a lot of outflows reportedly from Binance. I mean, FTX obviously is collapsing. Some crypto lenders going bankrupt, halting withdrawals. So have we reached the bottom or are we still searching for that?
So I still think we have a little bit to go. I think the sell-off earlier this year was largely a capitulation across the board of the most pristine assets being sold because that's what the best allocators held. If you look at sort of the best performing crypto assets year to date, you will see a list of tokens that you would not have predicted to start the year. You have the best performing assets being sort of Tron, BNB, Dogecoin is in the top 5, Ethereum Classic.
I was just going to say, shares of Coinbase hit a fresh all-time low today, and yet Doge below Dogecoin of all things. What's going on there?
If you look at the return for a lot of those assets, it's very event driven. So Dogecoin in particular was around the Elon event. Obviously, BNB pumped on the FTX collapse. Ethereum Classic jumped up on sort of the run up to the merge. All of those coins are fairly thinly traded as well, so it's easier to push those market caps around. But I think the broader theme is the assets that folks held that they could sell for and into liquid markets were sold. So Bitcoin, Ethereum, and the like were sold across the year, which is unfortunate, but which means they may lead the way on the way back up.